Good evening and welcome to the Australian Stock Market Show. As the All Ordinaries Index has failed to achieve a new all-time high last week, it raises the question, have the buyers exhausted their immediate efforts and, if in doing so, paved the way for sellers to take charge, or are they just taking a breather? Stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at world currencies, and for our main topic in tonight's show, we get into the top 5 trading tips for income so you can beat rising living costs. First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the market. Tonight we're excited to share our thoughts on some great stocks like Computershare, Commonwealth Bank, BHP, major world currencies and more, so get comfortable as we'll get into those soon. I'm Dale Gillam and I'm your host for tonight, and joining me are two of our team of highly experienced analysts and professional traders, Janine Cox and Philip Tortevsky. And together we're Australia's most trusted stock market educators. Good evening team, how are we?
I'm fine. How are you today?
Super fantastic, and
You're
I'll get better.
looking great. You've got a nice tie on tonight as well.
Thank you. Well, you're
Hope
looking
you've got
good.
your
Philip
runners on as well.
Philip looks very fantastic over there. New suit jacket.
New suit,
I
new
know,
tie. I'm
look at you.
ready to rock
Fancy
and roll.
Yeah, we won't tell you need to get a new jacket because the other one was getting a bit tight. Anyway, tonight, as mentioned, we will get into the major world currencies. But first, let's take a look at this week's hot stock tip. Phil, what have we got for everybody tonight?
All right, so tonight the hot stock tip is Sonic Healthcare, stock code SHL. So let's get straight into it. On your screen right now is the marketindex.com and some snapshots on Sonic Healthcare. It is a provider of medical diagnostic services. The group provides specialised pathology, clinical laboratory, that was a tongue twister, and diagnostic imaging services to clinicians. Some statistics on this one, it's got a 2024 year-to-date performance of negative 24.47. So everyone's probably wondering, geez,
Good
Phil,
tip.
what are you doing here? But I'm sure you'll change them once I'm done. But a one-year performance of negative 31 versus the sector, which is minus 26.5, and the ASX 100, which is minus 38.85. Now, it's got a market cap of 11 billion, ranked within the top 50, so obviously a stock that is on the radar of most. Now, let's get into the charts.
Gee, if it goes down much further, it could slip outside of that, couldn't it?
Oh, look, it could. Let me finish the info and then we can get to the jokes. But
Let me get to the good stuff.
Yeah, but look, let's start off with the monthly chart, because there was a few things that caught my eye with this one in particular. And you'll see the first thing is we've got this momentum line here in grey, and obviously the stock's come back to test this momentum line. It's also come to this level, horizontal level, where I was looking for it around $23, $24-ish level. And you can see in the past how important these momentum lines have been. Now, I've also drawn some levels of previous significant declines on this stock. So you can see that, you know, in the first instance, the stock fell about 52% before rising on to continue this very long-term uptrend that it's been in since its inception, to be honest. And we had another example here where the stock fell about 47% before running on up. And again, in more recent times, if we zoom in, we're up around that 49%. So rounded off at around that 50%, this stock does tend to...
Who says patterns don't repeat in the stock market, hey?
Only people who don't look and search them, but
Yeah.
they definitely do. And look, to that point, you know, we're looking at this particular stock, and obviously it is coming out of one of those major significant corrections that it's had. And if I go to the weekly chart, there's just a few more gems that really confirm what we're seeing here. And you'll see I've got the volume tab marked here, and basically what I found was each time the stock fell over 40-odd%, you start to look where the volume, what's happening with the volume, and you can clearly see from that down move, as it's falling, volume doesn't, you know, obviously there's volume there, but the peak volume where it spikes is once it passes that 40% fall on that momentum line.
Great.
We get a big spike in volume, and then obviously that's a signal that the market's going to go on and continue. Now, as you said, Janine, who says patterns don't repeat, eh? Again, we're at the 47% fall. What do we see? Volumes at a distinct level. We get a break with the highest volume since that whole down move, right on that level around there, just as we've hit that momentum line. And fast forward to today, we're looking at the stock, again within that 50% fall on the momentum line. And what have we had last week? We've had a spike to new levels in volume throughout that whole downward move. So a lot of food for thought. Obviously, we talk about trading on confirmation. So obviously this stock is still falling. So we are looking for it to do, confirm with price that it does want to go higher. But to me, this is one that definitely goes on the watch list.
Wow, is that all you got to say?
Interesting, I like it.
Interesting, I like it. So
You've heard it.
That's two thumbs up from Janine anyway.
Yep.
Well, that is it for our weekly hot stock tip. Now, shortly we're going to get into our topic for tonight. But before we do, right now is your opportunity to get involved in the show and have your questions answered. Now, remember, we do prioritise phone calls, so pick up your phone now and call 039290 9988, or you can text the number or your question to the number on your screen. Now, the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth. So pick up your phone and dial 039290 9988. Now, while you do that tonight, we'll give you our thoughts on major world currencies. So let's get into that.
On your screen right now, you can see a watch list of the major world currencies. Now, let's get into this. As you know, Phil, this is my favourite segment of the month.
Is it?
She goes, oh goody, Phil, I've got currency tonight.
British pound versus the US dollar, okay, up 0.37, but there's not a lot of positive action happening here. It's a sea of red. For these currencies, euro dollar versus the euro US dollar down 1.5%, Aussie dollar versus the US dollar down 2.13%. We're at 66.6 cents at the moment. It's an interesting one, but you know we know that the currency is sort of stable around these levels, but you're going to talk more about that shortly. New Zealand dollar versus the US dollar down 2.6%. The Canadian dollar versus the US dollar down 2.8%. So, but coming right down to the bottom here, Japanese yen down 10% versus the US dollar. Interesting.
Yeah, it is interesting, and I mean that's why we're going to bring up the DXY, which is the US dollar index chart, because all of these stocks on the watch list or currencies on the watch list, they're relative to the US dollar. So the fact that they're all going down is meaning that the US dollar is rising. And if we just go back to the charts right now, you'll see we have brought up the US dollar, which is the bar chart there, and you can see since 2011, obviously it's been on a rise. We've got overlaid on top of that. In pink is the pound versus US dollar, as you just saw on the watch list, which is a trading instrument, not the spot pound. We've got the euro versus US dollar again in the blue and the Aussie versus US dollar in the orange. And you can see that inverse relationship. As the dollar rises, these currency pairs are falling. And it's quite interesting now. We are positioned at an interesting point with the US dollar. Obviously, it's been going up. It has stabilized here over the last year or so, however many months that is, about a year. But because we are seeing that indecision. They were talking about dropping rates. Now they're thinking perhaps rates are going to go higher. So to me, it looks like the market is waiting for some kind of decisive decision. But looking at it from a technical perspective, if it does break on higher, to me, that looks like the market's going to run perhaps even to that 114 level. So if you're a trader and you're looking at this, you're looking at the pound US dollar and the euro US dollar and the Aussie US dollar, and you're thinking, mate, there might be some good shorting opportunities here.
Okay, so watching those to see if they take off to the downside. So, I mean, what do we have to see here specifically to know that that's what's happening? You're saying just a move above this high here back in October, once it goes through there.
Oh, that'd be a start.
Then that's the first step, is it? So the traders will be watching that level. But do you necessarily have to watch the DXY, or should you just be focusing on the currency that you're trading?
Oh, I mean, look, it depends on the trader. It's a good question. And some traders, it's like asking the question, do you watch the spot copper price if you're going to trade copper stocks, or the spot gold price? It's one of those things. Some do, some don't. Does it have value? It does have some value, because you can clearly see that inverse relationship between those currencies traded and the spot price. So an extra bit of confirmation wouldn't hurt, but I mean, it's not the be all and end all.
So that's going to be an interesting situation, isn't it, if our dollars falls away?
Interest rates do. If interest rates come down in the US and they don't come down here, our currency will go up against US dollars. If ours goes down and theirs doesn't, our dollar will go down further. So it's all about the buying and selling demand for your currency, doesn't it? So we'll see what happens. And if commodities take off, that's a whole different thing again. Well, anyway, that is it for our thoughts on the major world currencies. But before we get into our first email, remember to get your questions answered live on air. You will need to text or call into the show. You can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now, let's get into our first question. Our first email is from Stu, who says, "G'day WW team, have been a former student for the short course, didn't complete, and Talking Wealth subscriber. I work in mining and I'm staring down the barrel of redundancy coming up. It's not as bad as I will have time to revisit or attempt the course, which I didn't complete. Anyhow, not a holder, and I know it's a smaller cap stock, but could I get your thoughts on PNR? It appears to have run 200% plus over 6 months since the low in October and may be breaking previous resistance at 9 cents. It has seen higher volumes recently as well. Thanks, Stu." What do you reckon, Phil?
Yes.
You're the small cap dude.
Interesting, Stu. All right, I'm the small cap. Look, let's go to the charts because that'll help us answer this one. But I mean, look, a 9-cent stock, just to begin things off, a 9-cent stock, it's obviously very, very illiquid. You're playing in an area of the market that is susceptible to real erratic price behaviour. So depending on your strategy, if you are looking at this from a longer term perspective, then if I just zoom the chart out, you can clearly see that it's literally since 2004 not gone above the high there, which is, where are we? About
Could be a backdoor listing.
1940 cents, potentially. But, we are coming into these lows. Obviously, there has been price rising in the past. March 09 had a really nice rise out of these lows. Again, 2015 had a nice rise. There is resistance at 9 cents. So, I mean, look, it's one of those scenarios where understand the risk you're taking. If you're very comfortable with the risk you're taking and you know that it is an illiquid stock and there are all those things that happen around these price levels and you're comfortable with that, then sure, why not? But just, as long as you're comfortable with all that.
You know what I reckon? The issue with these types of stocks is never the getting in.
Yeah, it's getting
It's
out.
always the getting out.
Absolutely.
People buy these stocks and go, it's breaking resistance in
It's
this case.
also the drawdown too
Or it's
during the
this-
trade.
Yeah. So and I don't know how many emails we get or people going, I bought this stock and it went from this to this and then it's gone the other way. Where do I get out? So that's always the first question. So Stu, if you don't know how to get out, you should never get in the first place. So, but I think you're right there. I mean, it looks good for a 10-cent stock. So it
But
looks
so
pretty
much
good.
risk,
It
like
does.
we talk about in
Yeah.
trading. Trading involves risk, a certain level of risk, and the whole point as a trader is to try to nullify a lot of that risk by having the experience, knowing the skills and all that kind of stuff. But then you're throwing in a whole nother layer of risk by trying to capture or trade a stock that is very, very illiquid. So I think there are better areas in the market to make money, safer areas in the market.
Yeah, that's good advice. Yeah.
Really, really good advice. Well, anyway, we now have a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
Hi there, you're speaking to Kevin from Perth, Western Australia.
Oh, fantastic. Well, welcome to the show, Kevin, and thanks for calling in. What's your question for us, Kevin?
Thanks, mate. First time caller, but listen to the show every week. My comment today is about Telstra. I've noticed that it's been coming down recently and it's hit a 52-week low. It seems to have bounced off that and is trending back upwards. It's got a good dividend. Everything I read about it, analysis, suggests that it might be quite undervalued. And I wonder what you thought about it.
Okay. You haven't got it at the moment?
I haven't got it, but I'm looking to get into it. But I'm not an expert like you guys, so I'm looking for your input.
Okay. Are you looking short, medium or long term?
Probably medium to long term.
Okay.
I know that there's a good dividend there, so
Yep.
I know that I can continue to collect that if need be.
Yeah, no problems. I know Phil and I looked at it last week on our market report for talkingwealth.com, but I'm sure he's got it up right now and he'll give his thoughts. But thank you for calling in, Kevin, and well done from Perth in Western Australia. So,
What do you
Phil.
think?
Yes, very interesting. We did speak about this one, and we said last week that there was a line in the sand at around, if we go to the chart, below this low of June 2022, it was hovering around that price earlier in the month. and we said if it can hold around these levels, then there is potential that it could find support, but it hasn't done that.
No.
So it's broken through, clearly through. The fact that it is a long-term proposition, Kevin,
Well, it's medium term.
medium to long-term, perhaps there is, potential in the long-term hold if you are looking at that, but nothing in it right now in terms of price action says to me that the trend has reversed to the upside. So I would wait for that price confirmation to give you that,
A
confirmation.
nice
trending
trend
up
line.
at the moment,
A nice
is it?
trend line would do well on that. Just
Oh,
wait.
it will. It pays a good dividend. Yeah, he's right, but it's not. It's still trending down. There's
At the
no
expense.
uptrend at the moment. It's not trading up. It's just stalled for a second. So has it stalled? And is it going to go up, or is it stalled and then it's going to go down further? That's what you're saying.
That's the question.
Yeah. And people say, I'm going to pick it up for the dividend. That's fine, but how much are you going to sacrifice on the growth?
Exactly.
Correct.
Pick
and
up-
and it's about that fair value. You said it's undervalued at the moment, but then we see stocks that are undervalued and they keep trading down for another year or two before they really hit rock bottom and they start to go. So what the guys are saying, Kevin, is just sit on your hands for a little bit. Great, you're on the right track, but wait for price to start really moving up. A week or two up, even 4 and 5 weeks up, doesn't necessarily constitute a new uptrend on the stock. So that's about confirmation. But let's move on. Now we have a text from Dazza Aka, Mr. Huru, who is asking, please take a look at CVN. Illiquid, I know, but I would like Phil's view on the chart, as the formation is interesting to me for a possible short to medium trade if it breaks 23 cents with good volume. Geez, I told you missed a short term, Phil.
Wow.
But I know Daryl always emails in, and I always commend Daryl on his stock picks because they're very good. He had Whitehaven Coal, I remember a few others, and I like your
But
style.
that's a bigger stock.
I keep, yeah, it is. But and you have mentioned this is a liquid, and I have mentioned that I like Daryl's style. So, but look, let's get to the stock. It's good. I like it. It's found support, back to the March 2020 low, around that 11 cents. There was nice support there. Obviously, it had that run up coming out of that low. It took, just as much time to fall. You saw the bars getting shorter and shorter, giving us that little bit of accumulation, now touching that second low, breaking on up, expanding with some of the ranges here back in December 23, forming that higher base and now breaking again higher. So it's doing all the right things you want to see with stocks that are looking to come out and show that longer term next upward leg. So I like it, Daryl. I mean, obviously you know what you're doing. Have a nice little tight or a stop on it, not necessarily tight, but a predetermined stop on where you want to get out with this one to protect your risk because it is illiquid. Just double check that you can get in and out and transact, check the bid and the ask, the spread.
That's the challenge, isn't it?
Make sure that's all okay, that you can buy and sell when you want to buy and sell. And if you can tick all those boxes, then I think, you've got yourself another good
We're
one.
not even going to ask Janine because anything under $1 she doesn't like, remember, Uru, Mystic, and Daryl. So we're not even going to ask Janine. Anyway, we do have an email now from Terry who says, hi Dale, Janine and Phil. Why do companies use buybacks when they are trending higher? Even at all-time highs. I had shares in ALL, CPU and Kogan, but they were doing buybacks when it shouldn't have been necessary and artificially making higher highs. So I sold out at the peak for each at the time. They all subsequently dropped in price. So shareholders seem to be disadvantaged to me. I thought the time to do a buyback was when the shares were bottoming out to prop up the share price. Secondly, how does Wire ETF compare to copper shares in terms of potential as it has international copper stocks? Thank you to Emma from Educational Support who gave the Kogan hot tip months ago. Looking forward to tonight's show. Cheers, Terry. So we'll talk about buybacks, Janine. You want to have a chat about that? Buybacks, and she's saying why are they doing it at the peak? They normally do it at the bottoms, and I disagree with it.
Yeah,
they don't normally do that.
That's right.
So you want to comment on
So
that?
it varies. I mean, it can depend on what's going on from the point of the corporate requirements with their capital management.
Yeah.
So for a start, it could be that institutions are putting pressure on them to actually do something with that money, and they see that doing the buyback is the best way of doing it. Look, I mean, I have seen buybacks occur right near peaks, and you sort of think to yourself that was just a dumb decision by the company, but then maybe they don't use technical analysis to work out where the peaks are coming in. But So, I mean, sometimes that can tell you, and it can be actually a good little tool to use using your timing analysis to see whether there's a potential peak coming in right where a buyback is. But generally, the buyback amount is small relative to whatever you might be holding as well. So sometimes they're just trying to clean up a lot of small shareholders as well in that process. So I don't really pay too much attention to those.
No, I really don't either. And so to me, I don't so think they happen at peaks. And I think if those three fell, it's just the time in the market that they fell. It's sort of a coincidence more so than something that's solid fact. Now, do you want to go to the
wire chart?
The wire chart and have a good look at that, Phil?
Yeah, let's have a look. So what I've done is I've overlaid the copper futures price, which is in that pink dashed line, over and I'll just zoom it out on the monthly chart here so we can have a look, and you can see that obviously the copper's future price is moving, or the copper price is moving in unison with this ETF. So that was the main question. It was, is this moving like the ETF? Yes, it is. Obviously the futures price is a bit higher than where the ETF is right now. Not so surprising. I know we've got a nice little show on that to show you what ETFs are.
It's really important too, just to have a look at what the ETF is when you're buying an ETF. Just to make sure that you understand, not buy it blindly just because it's an exposure to copper or it's exposure to something else.
That's why Phil and I are doing a whole report for an hour for talkingwealth.com. We'll be doing it in about 3-4 weeks. We're just finalising our research, and people will be surprised about our research on ETFs. Actually, it'll probably put the wind up a few people.
Well, when we looked at the ETFs in the show in recent weeks, we saw that you couldn't make as much on the ETF as what you could just trading the stock.
Correct. And we'll prove that, and plus. But if you want to buy a market like this or an outlying market, maybe it's robotics or maybe artificial intelligence, I don't have a problem with an ETF, but I won't tell everybody what's going to happen in our show that Phil and I are going to do anyway. But thank you guys for your answer for Terry. Now, our next email is from Gerard, who asks, "Hi Janine, Phil and Dale, thank you for your show again, and hope you're well." Yes, we are, thank you. "I'd like to have your analysis on Strategic Energy Resources Limited. On Thursday, the 23rd of May, I brought at 1.6 cents, a good amount of units, and on Friday, the 24th of May, the next day, it closed at 3.4 cents. I did hold it as I was expecting it to go a little higher. Today, Monday, the 27th of May, but it opened at 3.2 cents and had been going down to 2.6 cents by the moment I'm writing this to you, this email. Morningstar Quantitative says it's undervalued and its fair value is at 5 cents per unit. I can see by the graph it has all the potential to go up to 4 cents. What's your thoughts? Should I hold it or sell it? Please advise. Kind regards, Gerard." Did you want to comment on that first, Janine?
Yeah, that's interesting. Not so much on the stock, obviously, because, that's just a heart-pounding situation that I wouldn't even, want to be looking at that. But the thing with this is it's interesting how it stopped first just below that 4 cents. That's no surprise to me. If they put levels there, quite often the traders or whoever's trading that will be looking at that, and they know that what's being said about it, so they're going to be selling out to take a profit just below that level. So that's the first lesson. Second one is it could do really nicely. I mean, it hasn't done anything like this for a long time in terms of that range, so it might go up significantly and could go up more than what Morningstar are saying, but it's a real gamble, this stock, as far as I'm concerned. So trying to decide what to do on it, you could back test it still, but it's just not likely to be as reliable as the bigger stock.
Phil?
I agree 100%. And obviously there's a liquid and then there's a liquid, 10, 20 cents, 30 cents, 40 cents, and then you're talking under a cent or 2 cents, 0.00 or 0.016. So clearly just by looking at the bars, and we're on a monthly chart here that tells me that this stock is a liquid, so you have all those risks and dangers that we said, and I wouldn't be surprised it can get up to 3 cents one day, next day on the open it'll be down at 1 cent. That can very much happen. We always say price confirmation, and for me 1 month, given the way the stock had been falling all the way since July 2020, a 1 month move up, regardless of how strong it is not enough to confirm with price that there's any long-term serious momentum to the upside for a long-term trend, which is what you want to see. So bit early, it's a punt.
Yeah, I think it's a huge punt, Gerard, and not to be blunt, but being blunt, if you don't know where to get out, then you probably shouldn't be in it in the first place. And I wouldn't take notice of the quantitative analysis that they're doing, because it's about buyers and sellers and what we think, and that's what will determine the price. And right now, it's a high risk stock. But anyway, that is our take on SER. Now for tonight's topic, if you want to create another income stream and beat the rising cost of living, then this is your show, as we are going to give you our top 5 trading tips. And as always, Janine loves to throw in some stocks that will help you. On top of that, we're also going to share 3 things you should avoid that many actually do when trading for income. Now, before we get into all of that, I'm sure I don't have to tell you that the cost of living is rising, and I definitely don't have to remind you that this is putting a lot of pressure on Australians, and maybe you fall into this. Now, we all know that the RBA is determined to get inflation down to between 2 and 3%, which is great if it occurs. However, we do need to be prepared, as things may get worse before they get better. Here is some research from the Grattan Institute, which says high growth in the prices of essentials such as food and energy have disproportionately hit lower income households. On the other hand, discretionary things like holiday travel are also more expensive, hitting high income earners harder. Now, the point they're trying to make is that inflation really is affecting everyone at the minute. Now, what an interesting situation this is. So what are your thoughts on this, Janine?
Yeah, well, I think you nailed it there in saying that it is affecting everybody. I mean, it goes from energy costs, from groceries, everything, you name it. Just even getting, I got a price on a set of tyres for the car. So it's just absolutely.
Well, stop doing burnouts.
Don't make any comments. So, I got a price on those. So, but it's affecting everybody across the board. So it's really about looking at, what can you do in order to relieve some of that pressure? And that's the thing, and not be at the whim of the RBA and rising costs.
No, I totally agree with you. I don't know, I've lived through a few recessions and inflationary periods and everything else, and yeah, they affect you, but if you plan for it, they don't affect you as much, do you, anyway? But now, with Australians taking on multiple jobs in an effort to earn extra income because of this current rising cost of living, we also have seen a rise in people trying their hand at trading, especially day trading, as if it's some magic bullet. But as the statistics keep showing, day trading is the least successful form of trading, more akin to playing Russian roulette with your money than it is to profitable trading strategies. Now, this is particularly so for beginners, and so I really do want to get Phil's opinion on what actually entices those new to the market down that day trading path.
Simple.
Sounds like I was saying it was going to be a special offer, wasn't
Beat
it?
of the drum down. Yeah. Look, it's very simple. It's basically marketing. Trading, at least over the last decade, has definitely been marketed as, the shiny new car and trade for 2 minutes a day or 10 minutes a day and take a weekly wage out of the market. And unfortunately, the market is more complex than that, especially for beginner traders trying to trade in those areas where there's, the most amount of noise in the market. It's obviously the statistics show what results, but it's the marketing, unfortunately.
When you see the vast majority of newbies going into trading FX, it's the marketing. Anyway, okay, so as Phil said, most that are new to the market bite off way more than they can chew, which can and often does lead to inconsistency and or failure. So how about we get into the 3 big mistakes that you should avoid when trading short term for cash flow. Now, number 1 in my book is over trading, or indeed trading when you should not, as the risk reward is just not there. Now, Janine, I know you've got some great thoughts on this one.
Yeah, look, I've worked with quite a few people over the years. Traders on this sort of stuff, and one of the things that I find is that people who are new to the market particularly are probably more likely to do that sort of thing, particularly male, and not being sexist, but that's just how it is. And so, and what they don't see is that it's costing them way more. And I can remember us sitting at a workshop one day where a gentleman was there, new to the market, and he had done that. He showed me his results, and I said, mate, come and sit down and I'll show you something on the computer. But he had no idea, because he wasn't able to pull back and see the big picture to see what he was actually doing. And I think that's probably one of the most important things, to actually analyse what you're doing. But it's very hard to do that in a place where you're you know, you only know what you know. You've only got certain reference points. So,
Yeah.
but I showed him just to sort of expand out from where he was, because you don't want to be paying the broker more than you're paying yourself at the end of the day.
I've got stories like that, you know, a guy trading CFDs, and we're spending all day trading CFDs. I showed him a few things, and then a few months later he goes, mate, now I'm playing golf and I'm making 5 times more money and trading a lot less. So
Yep.
big sin from that point of view. But anyway, the second big mistake is trading extremely short-term time frames. Now, Phil, you're the short-term man. Can you take this one?
Yes, yeah, again, quite simple, but complex also. But it's basically got to do with the volatility. You know, when you zoom into those 1 minute and 5 minute time frames, a lot of people are trading in the noise. And what do we mean by noise? They're not factoring in that, you know, for prices to trend, the trends form in days, weeks, months, what have you, but within that there is volatility, real volatility of a stock or an instrument, currency, whatever. The up and down volatility. Now, when you go into that 1 minute, 5 minute time frame, let's say these traders are trying to make 5 points on a market that has volatility within itself of about 100 points. So then they're often falling in that situation where, okay, I'm being stopped out, and they're blaming the market, saying, oh, I've been stopped out, the market's against me. But they're trading such short periods, and they're not factoring in that just that natural ebb and flow of the volatility of that particular market is what is taking them out. So that is the biggest killer. It's so important that you need to zoom out and understand what the actual volatility is of the instrument that you're trading, and then formulate your plan around that. And I find when they go into super short time frames, they just they kill that whole process.
Yeah,
That's
I
a
see
really
a lot
great
too
way of
anyway.
putting it.
Now, the third big mistake is failure to have a tested strategy, or in other words, not properly back testing a strategy, which inevitably leads to the strategy jumping, and then it creates inconsistencies, poor profits, and or losses. Now, Janine's our back testing queen, so how about you take this one, Janine?
Thank you. Look, I've found over the years that people will go into strategies or try strategies, and it may be that they haven't actually properly invested in themselves, so they're trying to find something, the cheap way of doing
Well,
something.
they're looking for Holy Grail.
Yeah, looking for the Holy Grail, but they don't allow the strategy to shine, so they don't allow enough time to properly not only just test the strategy, but to test themselves using it. So it's almost like that, oh, this doesn't work, I've got to go on to the next
So what are you
thing.
saying? They watch a YouTube video or read something in a book and then go, I'm going to
But they're
trade
only
with
testing it over a few months, and I think that's just nuts. It's not a good sample. I mean, if you understand the cycles and the way the market moves, in any given year you can have 2 phases within the cycle, 3 phases, 4 phases. So if 1 year they've tested it over, even if they say I've tested over a whole year,
this.
big
He's testing
deal.
it
That's-
over a bull market because it should all work.
well, you could have the 2 phases in that first year, so you've got only two opportunities to trade, and maybe half the time it's falling, so that it's just not a deep enough understanding of what's going on. That's
Yeah, I know
really
my experience when I'm in a room full of, presenting to a room full of people who think they're traders, or, you know, not our students, 90% of them don't even backtest.
Yeah.
They just try a theory and try and hopefully it works. But anyway, that is just 3 mistakes, and we could share a lot more. Now, the concerning thing to me, after nearly 3 decades of teaching people to trade successfully, is that statistics prove many of you will ignore what we've just said to you. Now, you have to ask yourself, why would you ignore what an expert is sharing with you? Well, there are many answers to that question. However, we're not going to cover them tonight, as it might take a long time. Anyway, I will only say that if you do want to go down the quick and easy road, then heed what we have said. If not, you will definitely go down the long, hard and slow road. Now that we've got those 3 big mistakes out of the way, it's time to share 5 tips that, if followed, will make you successful in generating an income from trading the stock market. Now, our first tip is set aside a percentage of your wage each month, such as 10%. So rather than buying a coffee or getting takeaway food regularly, put some cash away so you have capital ready to trade when the time is right. The second tip, which is crucial to your success and how long it takes you to be successful, is really to get there, is to make a decision to learn how to trade. Ignorance is expensive. Education will dramatically increase your chances of success and will ensure you make additional income. Now, I'm sure, Janine, you'll have something to say about that one.
I do, and look, I mean, I sort of felt like you were giving a bit of tough love there.
I was trying to be gentle, but I'd rather... sometimes I just want to grab people by the shoulders and shake them and go, listen, because you think you know, but you don't know what you don't know. and we can see the train crash coming. You know, and we say, here's some light at the tunnel. It's not a train coming to hit you. Better learn properly.
At least cutting down on that few coffees a day will help their health anyway, because it's not good for
but
your
they
gut.
need to learn properly.
But look, I mean, in terms of this, it's either do you want to sit there and buy some stocks and just get some income from the dividends,
Buy and pray.
or do you want to put in a little bit extra, and then you've actually got the option or opportunity, the choice, I guess, in which is what life should be about, having choices, to decide to trade for income. To me, I'd rather not be limited to just one, and there are downsides to just thinking you're going to get a dividend. You only get paid twice a year.
Yeah.
Who'd be happy with that?
Yeah, but I mean, it's about learning the right way. When would you jump in a plane where the pilot's got the dummies book to flying a plane? No, you wouldn't. I mean, it's exciting, but or you jumping in the plane in the pilot seat and you go, here's the dummies book to flying a plane. Yeah. It's exciting going, I can fly a plane, but you can't. You're going to kill yourself, or you're going to be dangerous. And that's what we see so many times with traders.
Yep.
They read a book or watch a video and they go, now I know what I'm doing. And you don't. Because it's that you need to have not just any education, it's the right education. And we see that.
The barrier to entry is so small with trading, and that's what tricks a lot of people, It's like you don't have to go to university.
And pay,
you don't,
80,000 or
you don't need to go and sit an interview with somebody. All you need is a bit of money on the side and open
tap
an
on
account.
a keyboard, don't even turn your brain on.
Open an account, know.
But can I just say one more thing?
No.
Even with buying a property, people could be $50,000 or $60,000, in the red before they even start getting any growth.
Yep, that's true too. Anyway, the third tip, which is just as important as the prior two, and that is you may have to change your thinking to see the opportunity. Okay, so can you explain what that actually means, Janine?
Well, changing your thinking's not easy, is it? Not for anybody, and that's the thing. But it's about sort of thinking outside the square and not limiting yourself to thinking that you've got to invest. It's not just about investing; it's about being able to trade. Move in and out of the market when you need to. It's not just about buying, because people say they can easily buy a stock. It's about knowing when to sell.
Knowing to sell is more far important. Yesterday I did a podcast which should go up shortly. It's basically the strategies of a poor mindset, or a broke mentality. And it's interesting, the 6 of those traits that I go through and show to people, well, why are you getting poverty, or why are you broke? And that's about changing the mindset around a lot of things.
Well, we've done a lot of podcasts on changing thinking as well. So we talked about, for example, don't think about higher petrol prices as being a cost to you. Think about, what can I do to counteract that? So therefore, trade the energy stocks and make some money out of it if you've got the skills to do it.
I gotcha. Now, our fourth tip, be accountable to someone else. Now, what we mean by this is you need to practice applying your knowledge. Practice does not make perfect. Perfect practice does. Now, the only way to know you're practicing perfectly is to get an expert to check you and make you accountable. Doing this will get you to your goal a lot quicker than playing the hit and miss game. Now, I think you can both give your thoughts on this one. I'll start with you, Phil.
Yeah, I mean, like you just said before, do you want to learn the hard way or do you want to learn the easy way? And, I was fortunate myself that I went and got the education very early on into the piece, because I had an experience in the market where I thought, okay, this ain't no joke. You can lose money quickly, or you can make money quickly. Both things kind of happen. But regardless, it's having that expert knowledge and education is going to fast track your process so much. I mean, just think about trying to do it yourself. 10 years go by, and then you have to go back to that starting point again to go source that, professional help. Yeah. It's like, how much time have you lost?
Yeah, and to me, the point is, how do you know you're doing it right unless somebody like you guys check it? And they don't. They have a false sense of security, thinking they know things. And we see that time and time again. It's so common. But make sure you get somebody who knows what they're doing, check you. Number 5 is invest in asset classes that will perform well with inflation, which is real estate, commodities, also seen as inflationary hedges. But you can also do really, really well with trading good stocks with the right strategy. Okay, guys, now we've talked about how you can earn extra income by trading short term. So how about we bring up some charts and show some examples. Now, I'll go to you, Phil.
All right, so let's begin with computer share. Now, on your screen is the monthly and weekly. I want to just go to the monthly and daily chart. I want to go to the daily chart because, and this is an important point. We are talking about trading short term, and a lot of people, again, as we say, it is marketed towards trading every day, trading intraday, trading 2 minutes, 5 minutes, an hour a day. But, you know, short term, people get paid fortnightly, monthly, you know, things like this. And we're talking about earning an extra income. So short term doesn't have to be trading every day. In fact, it is a lot worse and a lot costly. And the statistics prove that it is a lot fraught with a lot more failure doing it that way. But short term can be getting paid once a month, getting paid once a fortnight. So I want to go back to the chart here of computer share and show you that just a simple strategy. Now, I won't get into the nitty gritty of it, but these black horizontal lines are just as price is breaking through and breaking above. And you can clearly see that trading for short term, if you just alter your mindset a little bit with the way you position your exit and, you know, and take money off the table as you go along, you can see that since December 2023, we've had 7 trades. So 7 trades, which equals to around 1 trade per month. Now, if you're able to save about $1,000, as we've spoken about before, you put $1,000 per month on each of these trades, and you can make $7,000-8,000 in 5 months. Now, $7,000-8,000 goes a long way
on one stock.
The beautiful thing, though, about having the knowledge is that you can prove to yourself about whether you want to trade on the daily chart or whether you want it to be weekly chart, because you can still make an income off the weekly chart. It's just a question of how you think about it.
Great segue into the next stock.
So let's have a look at the next stock.
Well, the next one is, CBA is the next one. You want to take this away, Janine, because we are on the weekly chart here.
With this one, I mean, you've got this these horizontal lines here. It's about being adaptable, isn't it? To be recognise that there's a change in conditions in the market. But first of all, can I just start with these trends? I mean, when we identify that a trend has changed and gone from down to up, that is probably the best time to start trading for income. So things like trend lines, and there are other strategies, you know, using the price analysis, all the you know, the whole metrics of the price analysis, everything you know applied to the chart can help you determine whether the direction has changed. And once it's changed, then it's going to be so much easier to make an income out of the stock when it's trending. So that's the first point.
But even to that, like obviously, as you said, markets have different characteristics, and this one changed. And you know, CBA became a stock that was range bound in between these 2 black lines. And the reason I've got this green dot is at around this point in time, you would have realised as the stock's gone up, broken lower, and started giving us this choppy type price action, that at around this level you're thinking, okay, we are not in an uptrend anymore, we're perhaps moving into a sidewaysy type market. So you draw your lines over these levels, and look, you've got literally 11 trades in 20 months. If you were sold there, bought there, sold, bought. There are so many examples of how you could have traded this with more of a short-term mindset in a sidewaysy type market. So there are different models you can apply where the market's trending, when the market's going sideways. And we are being quite basic with this stuff, but it's there to show you that you don't need to be on daily charts, you don't need to be on intraday charts.
Well, you're better off if you're not.
You're going to be paying way less costs. You're going to keep most of the money that you make, and you're able to still get paid like you would normally getting a wage.
Yeah.
But next we've got REA Group. Now this one's your one, Janine. You've picked this one.
Yeah, this one I like a lot. I mean, when you find stocks that actually take off through these are the sort of stocks that are trending, you can make nice medium-term trades from, but you can also do some really nice trades just within a few weeks of these rises when you start to see these little consolidations. Now, you don't have to make money every week. It could be that you're making more doing it this way and you're putting it away. So instead of making $200, you're making $2,000, and therefore that money is covering you for a lot more time than what, you know, it was. But it's up to you to sort of put your feet in the water and then test this for yourself to see what actually works better. So you might not have been able to get trades, for example, through there, depending on the strategy that you were using. There were some early entries I can see in here, but if you made it super conservative and you waited for the stock to get through that high like Phil was showing on that previous example, and you then look for the first exit, and I'm not going to show the exit in this case, you've got to do the course to do that, to know that, or at least, you know, use a trend line, or there's some other strategies that can get you out more shorter term. But there are lots of opportunities to just make some money, put it away, then look for another opportunity, make some money, put it away.
Yeah, I think people are trying to trade ultra short term and they don't make the $100 today or the $500 today or this week. then their emotions kicked in and they try and chase the market and do some really emotional trading. So this way is so much more solid and so much more repeatable because consistency is the key,
Because it
isn't
could be just about building up the bank account so you can use it as an income, not thinking I have to take
Well, I
money
say
out of the
that
market
too.
all the time as an income.
It's not how
Yep.
much you make on any one trade, it's how much you can make out of your bank consistently.
And you said consistently, which is so important because when you're looking at these timeframes, the weekly and the monthly, you're trading within, you're seeing the real volatility of this particular stock. When you zoom in, like I was saying before, into the daily, and we'll go into
Yeah, you
BHP
don't
as
see
an
it, yeah.
example, like look how clean that price action is on the monthly. Look at this on the daily. It's jumping around everywhere. So again, it's going to be so much harder. You're going to try work on volatility on the daily, and it's moving so much more in terms of real trend, you're going to get stopped out everywhere. And I just wanted to show this one
Great
with,
point.
with BHP in particular because this is a stock that you probably want to stay away from.
Can you just expand that up to show how the gaps are on that
Yeah.
daily chart? Yeah.
And you can see, you know, stocks like BHP, the multi-exchange type stocks, they do gap. And now it could be a good thing if it goes with you, but at the end of the day, we're trying to take away risk. This is money that you're trying to make as extra income. So you want to be as safe as possible. And if you are looking to go in those shorter timeframes, then, you know, these are the kinds of stocks you probably want to stay away from. Even though BHP, longer term perspective, you know, weekly, monthly charts, yeah, great stock to trade. But
you
from
want something more reliable.
yeah, so, and I mean, look, if we go to the next one, which is WiseTech, and I'll zoom this one
This is
out.
a great example.
Yeah, this is another daily chart, and you can see I've got a whole bunch of markings here, and again, clearly just showing you some examples of where you could have traded this stock through these types of movements, but also drawing those momentum lines. Janine said you can buy there, buy there, buy there, sell there, and you've got within the space of since November, December, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 opportunities in the space of 5 months. That's more than one trade a month.
Yeah, someone
It's almost two.
asked the question today
One a
about
fortnight.
CFDs, and you know, for trading for income. People don't need to use leverage necessarily
You
to
don't have
trade.
to, no.
That just adds another layer of risk to the whole thing. That maybe if you've got cash, so you don't need to go down that path, and you need time in the market to
But that's
prove
an
that you can
important
trade
point,
with cash.
because a lot of people think the majority of newbies go to FX because they think I don't have a lot of money, so I'll go to a leverage market, and they'll use their money to make money. But then it's exactly the opposite of thing that they should be doing, because they don't have deep enough pockets to stay in the FX market long enough to actually learn how to do it properly, so they lose
Yep.
all their money.
Especially trying to trade 1 minute, 5 minute time frames.
Yeah.
I mean, you're going to need deep pockets.
Brokers are
'cause
happy because they're getting your money,
Yeah.
because they're whatever you're putting in your bank or your margin for the FX broker, they know 90% of that's their income for the year. So they're laughing all the way to the bank and to the Bahamas. So have we got another stock?
We do. Now this one's Bellevue Gold. So we've decided to pick something that is a bit more volatile. Obviously, a gold stock is a place that you would look, but I mean, look at the volatility you get even on the monthly chart. Now, you know, you've got these really nice volatile moves. Now, obviously, if you are going to trade stocks like this, the experience needs to be higher up with the nature of the price action. It is a lot more volatile and erratic than your stable type top 20, top 10 stocks.
Can we just expand the chart up, because these things can work really good with reversals. I mean, if you can time your entries, some of the short-term strategies that we've got in the CFD course work really well. So if you can actually time the entries well, that's the most important point for this. It's all about getting that entry right first and making sure that you know how you're going to get out. But the exit strategies could be reversal bar confirmations. Combined with some price levels, you may have a strategy for that. But if you're going to back test it, obviously it needs to be a black and white approach, and then you just add a layer over the top of that based on other things that you know on the chart.
And can I just add with this one real quickly? If we just go back to the chart, I'm just going to draw a few momentum lines, but you can clearly see
Yeah,
that
I don't like that one.
even though you're trading on a weekly time frame, you know, you've got so many opportunities to trade this stock in this period, and you're talking about moves that, you know, you're talking about 50-odd% moves.
I know.
You're
It's
talking huge volatility. So don't disregard, obviously, a area you can go to as well.
See, this is interesting, isn't it? Because I like this one, and it might surprise you that I picked this one. But what I thought was, Phil's smiling, but what I thought was interesting is it changes personality, like BHP changed personality. So this is where a trader who thinks all of a sudden I'm making great money trading these really, short moves, all of a sudden that changes. If you don't have a bigger picture understanding or a broader appreciation of how to analyse a stock, then you'd never even understand what was going on, and you've made, you know, consecutive trades that have gone the other way, and you still don't know how to fix it. That's
Yeah, I know that.
challenge.
Yeah, I mean, I know it sounds like Janine and Phil and myself are, you know, hammering retail traders, you know, but we're not. That's not what we're doing. I mean, I've been teaching retail traders for better part of 30 years, and Janine over 20 years now with me, and Phil a little bit less, and we do want you to understand. But the thing is, we see what your future looks like, and that's why we're so passionate about saying what we're saying, because we have so many people come to us, maybe 1 or 5 or 10 years down the track going, yeah, you were telling me this back then, and now I'm finally hearing what you're actually saying, and now I'm making a lot more money, and that's the win-win for you. So if you've anything resonated for what we said tonight in this main topic, please think of it, think about it, and start putting it into your strategy, because you will do better. But anyway, that is our topic for tonight. Stay with us, as we still got plenty of emails and stocks to go through. For those watching on YouTube and Facebook, remember, you can watch all of tonight's show, plus the additional exclusive content that we have, including more stocks on Talking Wealth. So head over now and grab your free 7-day trial. You can also watch our weekly Australian stock market report, where we share our views on the market. Now, every week we share multiple stock tips that will pay for your yearly subscription. Now, if that's not enough, you'll also get hundreds of amazing interviews with global industry experts in the stock market, finance, gold, money management, mindset, well-being, fintech, artificial intelligence, business, and loads more. This is all on talkingwealth.com. Now, moving on, if you want to talk to us about a stock or ask a question, pick up your phone right now and give us a call on 03 9290 9988. That's 03 9290 9988, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Our next question is from Julian, who says, hi Dale, Janine and Phil. Appreciate your good work. Had a quick question regarding shorting confirmed downtrending stocks, particularly in a bear market. Now, with the upcoming crash you forecast in a few years' time, what are your thoughts regarding the efficacy of this approach, and do you have any personal experience doing this? Note, I'm a current diploma student and don't plan on using this approach until I have the necessary experience. Regards, Jules. I reckon this one's a good one for you, Phil.
Yes, I do have experience in both going long and short, and just my personal opinion, but you know, when you're given that ability to trade long and short, which you will have as you finish off the diploma, it's almost like saying I'm going to tie one hand behind my back and only play with the game with one hand. I know Janine's got a different approach, but to me it's all about trading, and if it's going short, why not? If others can get on that and profit from that situation, then why shouldn't you? So I agree with it. I think you should trade long and short, and get good at it, because it'll definitely help.
Well, everything in your course that we teach you in the course
can be both long and short.
Can be both work for both long and short, so you're not going to have a problem with all of that. But thanks for your email. We do appreciate it, and it's a great question. Now we've got a text from Jacob, who is asking, please look at Origin Energy. I've not bought in yet, and I'm waiting for it to give me an entry signal above the prior peak in June 2018. Looking for a long-term hold until the end of the current market cycle. What do you reckon, Janine?
Too late.
Okay, do you want to give me the short answer?
Look, it's already gone through some really important levels at the moment, and I mean, look, it depends whether you're looking more shorter term, because I'd say if you are, then that's probably okay, but I'd wait for a bit of a pullback now. It's been going up now. If we look at the low here, back in December 2023, so we've obviously had, you know, almost 5 months now up. After that period of time, you'd expect that a stock's more likely to have a bit of a pullback. So I'd at minimum be waiting for that, but you know, it's a question of strategy and what the upside is. Now, it could go somewhere between $12 and $14. That's a possibility, but it may not. It may just hover around these levels between sort of 11 and 12. So,
well, so you're saying there's better stocks right now?
I think that there are other opportunities now.
Yeah, for that better opportunities. All right. You don't want to say anything, do you?
I was about to, but I'm thinking,
You
do I
can-
say
you
something?
can
Do I
if you
not?
like.
Yeah, look, I mean, like Janine said, if you just go back to the chart, you can see on the monthly chart, stocks just don't rise in straight lines. But even though this has been so volatile, you've had good opportunities as it's pulled back and giving you real nice technical levels of entry. Now, right now, you're not seeing that. You're at the tail end. As we like to say, you're late to the party.
Yeah, a lot of people are.
If you're late to the party right now, you're best not turn up until you get a better opportunity.
Well, how often does we see people buying at stocks near their peak and fall away? Now, we showed that on the Commitment of Traders report. We've showed that in our recording that we did when the next market crash is happening for talkingwealth.com, which we did, about 6 weeks ago?
Yeah.
So if you haven't seen it, you can go to talkingwealth.com and get your free subscription. If you haven't got it, get it and you can watch that one. But people tend to buy at the top and sell at the bottom. And when that snowball's got bigger, that's when they get in, and that's probably what's happening now.
Yeah.
There are much better stocks to get in that have gone down. They're about to go up. Now we've got a text from Daryl who is asking, please look at MAD. It's a newer stock, has been trading sideways for a few months or perhaps consolidating. I do not own it, but have it on my watch list, and it's asking your thoughts. So what do you reckon, Phil?
Great. Yep, sure. It is consolidating, and it has, it is coming off a really strong run. If we go on the charts right now, on the monthly chart, you'll see that it's had a stellar run since March 2020, obviously having a nice consolidation. And I actually like the fact that it's doing that because, stocks that run up really sharply, they do have the potential to go back down as sharply and break down. But this is really holding. It's consolidating. It's giving us a real nice technical pattern like we like to see. Any breaks above, where are we with my horizontal line? If we get a nice break above this $7.30, and then I would be watching around $7.30, see how it breaks, see how it reacts post the break. And if you are seeing good signs, then I think this is primed for another run up, albeit as long as it starts moving up.
Cool. Do you want to
I
say
like
that?
it too, and I think that's a really good level that Phil's just talked about. Yep.
Well, there you go.
great.
You got 2 thumbs up for that one. If you do want to call in, make sure you pick up the phone and dial 92909988, or you can send us a text. But let's move on to the next question. And this one is from Akshay. He says, hi, Dale and Janine. Awesome. A big fan of you both. All three of us, I would think you're meaning, so Phil's involved in that as well. Could you please look at VRT and NVDA stocks and provide your views? I'm not in these stocks, but would like to buy them for the medium term. Thanks, AK. Well, thanks, AK. We are glad you love our show. However, it's called the Australian Stock Market Show, and we call it that for a reason, is that we cover the Australian stock market. Now, the stocks you've chosen are both US stocks, and so, sorry, won't be looking at your stocks tonight. Further, we only look at one stock per email, so we can help more people. But you really are welcome to send in questions about investing in or trading Australian stocks. So I am sorry we can't answer your question tonight. Otherwise we'd be breaking our rules. Now remember to show your support for our channel and smash that like button. If you do enjoy watching and want to see loads more of our content, click subscribe now. Subscribing helps others find our channel so we can help them too. Now before we let you go, what was your favourite part of the show? Was it our hot stock tip, our topic for the night, or was it a viewer question? Let us know by commenting below this video. Now thanks to all those who are watching on YouTube and Facebook. If you're watching on talkingwealth.com, stay tuned because we've got lots more exciting stock picks, insights and strategies. We'll be right back with all that and more. Next week in our main topic, we get into the top 10 stocks to buy now to trade with leverage to 10x your returns. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now, if you love our show, remember to hit that like button right now and subscribe to the channel, as this shows your support for the team that puts in the effort each and every week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us for now. Goodbye, good luck, and good trading.